Alright, what is going on, everybody on YouTube? Griffin here, coming back to you guys with another live stream from the Millennial Motivation Entrepreneur YouTube channel. First and foremost, before we get going, if you're new to the channel, we'd love to have you here. Definitely consider hitting the subscribe button below and hitting the bell icon right beside it. That way you'll be notified every time we go live or upload another video. We try to do these live stock market streams and whatnot, and trying to also incorporate a few lessons and all that for the newer traders and investors, all that good stuff. Just people that are trying to learn about just simple things, from setting up your thinkorswim charts to just simply day trading, all that good stuff. We try to incorporate those lessons, as well as, like I said, these live sessions where I just kind of come, give you guys an overall update, kind of give you guys my point of view on the market, and then of course, if we have any stocks or questions, ETFs, futures questions, anything like that, that's why we got the chat pulled up over here for you guys. So if you have any questions, have any stocks, anything like that, feel free to shout them out below. Or if you're catching this at a later date once it uploads, if you ever have any questions or any stocks, feel free to either comment down below once the video uploads, or you can also reach out to me on our Discord group chat. That's also down in the link. It's linked up down in the description below. It's totally free. We don't charge for anything over here, of course. And with that, we will just go ahead and just get right to it. I'll make sure that our stream health is doing all right. Looks like we got one of you tuning in so far, and it looks like we are all good to go on the stream health. And of course, if there's any issues or anything, please let me know. I definitely want to know that so I can fix it for you guys if necessary. But with that, we'll just go ahead and just take a look overall at the broader markets. Pretty decent day overall for the markets. NASDAQ finished up well above 8,600, actually briefly touched 8,700 right before the close. Pulled back quite a little bit, almost 100 points actually from that high. It was needed, right? The markets were up somewhere around, I know NASDAQ touched over 2.5. I think it might have even pushed 3% at one point on the day, but everything was up pretty much, give or take, around 2 to 2.75% at one point throughout the day. So I'm not surprised at all that we're pulled back a little bit here. Everything across the board seems to be down about 1/4% to 1/2%. Oil pulling us down a little bit, even though oil had a pretty decent day overall. I think oil at one point was up around 22%. Right now pulling back also about 2.5%, 2.33%. And trying to kind of find a support there. So we'll see what happens overall overnight. Of course, I'm primarily in TQQQ, which we'll talk about here in a minute, but I'm not by any means worried or anything about the markets where they're at the moment. We definitely needed a pullback, which we had Monday, Tuesday, and now we've kind of made a little bit of ground up. Honestly, my end of the week target from a NASDAQ standpoint is right around 8,800 is kind of what I'm thinking. For the ES, the S&P 500, I'm thinking somewhere around that 2850, maybe even retouch 2900. And from a Dow Jones perspective, I would like to see, let me pull that chart up actually, because I don't want to misspeak here. It's been a few days since I've looked at the Dow Jones, yeah, 24. I thought it was going to be around 24 is what I was wanting to see. I want to see us close somewhere around, at the minimum, 23.9 to preferably somewhere north of 24,000. So we're not talking huge moves overall. I mean, we're talking about 700 points to the upside on the Dow, pretty much just making up a little bit of lost ground that we lost over the last couple of days. And speaking of that, so a lot of people were kind of predicting this, that we were going to pull back. Even I said it could really go either way. I always tend to bet more to the bullish side than the downside. You guys know I did have a slight hedge. I have TQQQ as my main position, and I had SQQQ to kind of hedge. I did go ahead and close all of my SQQQ for about 6, I think it was. Those of you in Discord know the exact number, but somewhere around like 6 or 7% profit. Nothing major. That was roughly, I think, $150 position, so only about $8 of profit. Nothing crazy over there. But now we are completely, pretty much all in on TQQQ. We actually have, I think, 25, 26 shares of that at the moment, and we're down right around $2.50 to $3 per share at the moment. So that position is down somewhere around, we can open it up here for you guys to see. let's see, let's go over here, get this out. So we are down somewhere around like $60 to $75, something like that, on that position at the moment. And it was actually down pretty hefty at the end of the day yesterday, but always just sustain the course. We know the market goes up long term, obviously, so I wasn't going to get rattled or anything. I actually averaged down all day Tuesday. I just started buying a couple shares, pretty much rode it all the way down into the close on Tuesday. So that got our average price down quite a bit. I believe my average buy price is somewhere around like $63, something like that. So I mean, or I think it's like $63.30 or something like that to be exact. But we're really not too down on it. It's just the amount of shares. Obviously, we're talking $2 to $3 per. If you're talking about the average, we're down about $2 to $3 per share. So obviously multiply that by 25 to 30 shares. That's why we're down that dollar amount. But overall in the account, we're still up about $150 over the last few weeks, which from a percentage standpoint is about 10% to the upside. So you're always going to have a little bit of pullbacks. Like I said in one of our previous streams, if throughout a 52-week period you can average even just 0.5% of gains per week, you're going to not only outdo the market, but you're going to outdo very, very, very many traders and institutional guys. So just got to keep that in the back of your head. Whenever you have those pullbacks, don't be so quick to pull the trigger and sell, unless if obviously the trade's just super going against you. Like if we start to see signs of just completely melting down, then obviously I would reevaluate that position. Me personally, I don't really see that happening. I'm looking kind of big picture. I want to pull up the 4-hour chart. Looking at the 4-hour chart, our MACD went green today. That was a good sign. Now, could it obviously go back down? Yes, we could. If we do, I think the lowest we're going to see, pull up the NASDAQ here since that's what this is based off of at the end of the day. Get that pulled up, zoom in here. So if this thing decides to roll back over, I think the lowest we go is around that 83.50 to 83.60 level. And if for some reason that breaks, we're probably talking about coming back down to 8100. So that would suck short term, but I would still hold out through the position because that would probably be the furthest that I personally see it going. A lot of people, for God knows what reason, are talking about retesting the lows. I do not see us retesting the lows, in all honesty. If anything, we might be starting to set up for some sort of range-bound trading for a little bit. We got the economy starting to slowly open back up in some places much quicker than others. That is obviously a hot topic right now in the news, and I'm not really going to get into. But I think we're kind of possibly setting up for a range-bound trade here between 8,000 on the NASDAQ to up to about 9,000, just about a 1,000 trading range. And then when you're talking about the S&P 500 / ES, we'll take a look here. I'll go ahead and delete this. We had a little uptrend that we were tracking on a previous stream. That is broke, obviously, but when we're talking about the whole range bound on the S&P 500, we're probably talking about somewhere around 2,700 on the low end. I mean, if you want to say super low, you may talk about potentially retesting that 2,600 to 2,625 range. So let's go ahead and expand the range a little bit. We'll call it 2,625 to a high of about 28. We'll just call it 2,850. So you're talking about roughly a 200-point range on the ES. And then, of course, for the Dow Jones Industrials, we'll zoom in here. For that, we'll call it 22,000. Let's just call it 22,400 to about 24,000. We'll call that 400 as well. So also about a 2,000-point range there. That's kind of what I'm thinking we're kind of setting up for, because the market's really, we had that extremely just oversold condition. Obviously, we all kind of know what happened there. Pull up the one-day chart. We obviously know that we were just massively oversold at 18,000. We've had like a 30% rally off that low, and now we're kind of staggering, just kind of waiting. It's all what if this, what if that, what if this, what if that. So I think that's what the market's really doing right now. It's just kind of bouncing back and forth, just trying to figure out really what's going to happen. Are we going to have a technical recession? Are we going to just have an immediate just boom, bounce back once the economy opens back up? Is everything going to just explode? I think that's kind of where the market's at right now. It's trying to factor in both worst case scenario, which is what we had down here, of course, and it was also kind of, I wouldn't say factoring in best case scenario, but it was factoring in, hey, if if the economy just, once everything opens back up, just shoots through the roof, we could easily go back to all-time highs by the end of the year. I'm not in the camp necessarily that thinks we're going to retest the all-time high by the end of the year. However, we tend to look at ES the most, of course. So I'm going back to that, which just went positive, by the way. I'm not in the camp that I think we're going to retest 3,400 or anything like that by the end of the year. However, I would not be surprised if we get just smack dab right around that 3,000 level on the S&P 500. So you're still talking about a 200 to 220 point move to the upside of potential for the S&P 500, which is roughly not quite 10%, but at least another, I think that'd be about 8%. Somewhere between 8 to 10% to the upside. You can correct me if I'm wrong, but somewhere close to that 10% move to the upside. But obviously, like I said, there's a lot to be determined here. Everything's kind of just what if right now, and that's why, like I said, I think we're just going to kind of get range bound here for at least the next minimum, probably 2 weeks, maybe even upwards of a month or so. It'll just kind of be interesting to see how this plays out. But at the same time, this could just be a decent pullback setup where a lot of people are starting to buy in. I heard there were a lot of buyers in the queues specifically when this thing went below 8,400. That might be part of why we kind of started to go up there. I heard there were just a lot of buyers in at that 8,400 level. So who knows? We'll kind of see what happens. The rest of the week kind of is really going to be the setup, I think, for whether or not we're going to kind of get range bound or if we're going to potentially keep breaking out to the upside. Either way, when we're talking about the NASDAQ, we'll go back to the 1 year, 1 day chart here. Honestly, I think this thing will probably get stuck out. We'll get smack dab just by the end of the year, just get smashed right around, not smashes into the downside, but just planted right around that 9,100 level. It's kind of what I'm thinking. It has just completely went parabolic over the last few weeks. Obviously, it came down to about 6,600, and we're all the way up to 8,600 now. We're literally 2,000 points off the low, so that's about 33% roughly from the low. How's it going there, Eric? So that was definitely due for a pullback, but of all the three indices, I will say I think the NASDAQ has the most potential to get back up to the all-time high. Even the Russell 2000, all that. I think that the NASDAQ has the most potential because there's so much technology in the NASDAQ, of course, and a lot of technology is really going to thrive even if this thing gets drug out. So I don't really see I for sure do not see the NASDAQ going back down to like 7,000 or anything like that. I think it's going to hold up fairly well out of everything. I'm reading your comment right now. Google skyrocket in June. I can see that for sure. People underestimating the power of the stimulus money. Yeah. And with the stimulus money, I think that I'm kind of torn on. I think that it will for sure impact the economy. Obviously, I think it's going to impact the economy, at least in the short term. We can talk about the national debt and whatnot in the long run, but from a short term, as of like this year for the stock market and whatnot, I think that, yes, the stimulus checks are obviously going to help out in the aspect of once everything starts to open back up, like you were talking about in June, May, June, whenever it ends up being. I think it will help the economy. I think people are like you said, underestimating not just that stimulus money, but the fact that there's a lot of stuff that people are starting to realize, just stuff that we were kind of taking for granted. Like me, for example, my hair has been just out of control. I don't like give too much fucks about my hair or anything like that, but I like to keep it cut, usually get it cut once every 3 to 4 weeks, something like that. And I haven't been able to get it cut. I luckily got it cut like the Sunday before Dallas County started shutting everything down. But I think that's been, I want to say like 6 weeks now, something like that. So I mean, I'm like stretched out. Like usually I would have had 2 haircuts by now, essentially, or coming up on 2 haircuts. And that's just one example. I mean, there's so many other things. Gyms. A lot of gyms are not collecting the monthly payments that they normally would because obviously the gyms are closed. The restaurant industry, obviously, I mean, you guys, I'm sure, pay attention to business news and whatnot. I mean, just all these different industries that we used to just take for granted. I think their business is going to skyrocket once everything opens back up. And I think at the same time, though, that's kind of a double-edged sword is you got one side where people are just like, let's go. Let's open this shit back up. Let's start just doing everything. The economy is going to go through the roof, yada, yada, yada. But then you got another set of people who honestly are too attached to the TV and social media, if we're just going to be honest. But you got the people that are just scared at the end of the day. Like obviously everybody wants everything to go back to normal, but there's the camp that thinks it should go back to normal tomorrow, next week, here in the next couple weeks, and you got the other camp who says, man, this thing might take a year. It might take, how's it going there, Joe? It might take 1 to 2 years, like that kind of thing. And me personally, I'm kind of in that happy middle. Like, I think we obviously need to take a lot of precautions. We need to kind of slowly do this thing. We don't just need to go crazy. Like, I think Georgia, I'm sure all of you know what Georgia's doing by now. They're kind of putting, I forget the saying off the top of my head, man, I wish I remember that saying now, but I think they're being too bullish essentially in the aspect of they're kind of just going too quick. Like, I'm all for starting to open the economy up like this week or even next week because obviously we flattened and it looks like even we're starting to go on the decline now, but you don't want to just take your guard completely down when we're just now starting to go on the decline, because you could easily think of a stock market chart. You go up, you peak, you come down, you could easily jump right back up if you're too ridiculous with just opening everything back up and just going back to normal essentially. Now, what I think personally, again, this is just me, what I think should happen, which I think is what we're going to be doing down here in Texas from what I'm hearing from the governor, is we're just slowly going to start saying, okay, these businesses can open up. We'll see how it goes for a couple weeks. Then we'll open these set of businesses up. And we'll see how that goes for a couple weeks. I don't think the actual economy nationwide and for sure state to states are going to open up completely, probably for the next 3 months at least. I think governors and even the president, like from a nationwide standpoint, I think we're going to really see most of the responsible state governments say, you know what, we're just going to slowly do this just a little bit at a time. And once we see that, okay, nothing's really happening, we're still going down, the virus is going completely away, then that's when we'll open up. But we'll see what happens. I mean, I do think overall that probably by June, like you said, June, maybe July at the latest. I'll put it this way. I think by the 4th of July, we're completely open back up. I think you're still going to have people at the end of the day that are scared and they're not really going to go out as often. But that's their business. That's their right at the end of the day. And that's the main argument here is, hey, you know what? It's my right. Essentially, it's my God-given right to, do what I want. I mean, it's my health, my life. Obviously, you have the other argument of like, well, it's not just your right because if you end up getting other people sick, yada, yada, yada. But it's like if you're that worried about getting sick and all of that, after looking at the numbers, looking at the facts, not just the number of deaths, but looking at the true facts that it's like less than I think it's less than 0.25% actually, but less than 0.5% of people are dying like in the world, not in the world, in the U.S., or it's even less for in the world, but in the U.S., less than 0.5%, less than 0.1%, whatever the true number is. Either way, just 1 in a million essentially are dying. It's like everybody should have their own option, essentially. If you're that scared, stay home. It's that simple. And I'm talking June, July, like once everything opens back up, which is when I think everything will be opened back up. Gradual opening over 4 weeks. Yeah. And honestly, I mean, even 4 weeks, that's very quick. I mean, we are obviously at the end of April, so if you're talking June, then yeah, that'd be about 4 to 5 weeks. I think it's going to be a little more stretched out. I'm thinking more 8 weeks, that 6 to 8 week range probably. Like I said, I think by the 4th of July, that's when everything's going to be open back up. But like I said, you're going to have people that just don't, they're going to be scared and not going to go out. So I don't think we're necessarily going to shoot straight up from an economic standpoint, because you're probably still going to have at least 1 in 5 Americans saying, you know what, I'm going to keep sheltering myself. I'll let everybody else go be the guinea pigs for the next 6 to 12 months. And once everything's okay, then I'll come out of my cave. That's kind of my aspect on that. We think about AEO. Is that a American Eagle? Let me take a look. Yeah, American Eagle. So this thing, I don't know. Man, see, so I'm only like 20, fuck, what am I now? I'll be turning 23 here in 2 months. I used to shop here all the time as a teenager. I haven't shopped there in a few years because I like to do, when it comes to like investing in companies like this, like your, what would you call these? Or would this be considered consumer staples? I don't know exactly, but like when you're talking more about like restaurants or clothing, like Gap, that kind of thing, I like to use the eye test. In all honesty, who's shopping there? How often are they going? What are they getting? How much are they getting? And what's the overall sentiment of the company, essentially, in terms of the following, so to speak, because it's a brand at the end of the day. And I know a lot of people stop shopping there because at the end of the day, their prices are just ridiculous. At first, it was Express, which is primarily what I wear personally. Now I'm wearing Express shorts as we speak. But American Eagle, in the last, I'd probably say at least 2 to 4 years, maybe even more, showing my age, not a teenager no more, but their prices are outrageous. I mean, even when jeans are on sale, they're like $60 in most cases. They say buy one get one half off, but then the price of those jeans that are buy one get one half off are like $80-$90. So then you're still paying like $40 or more for the other one. So it's, I don't know. I don't really like this company just overall. That's just me heading into this breakdown of the stock. When we take a look overall, on a decline too. Borderline penny stock territory. What the hell happened with it, by the way? Why was it down 20% today? Let's see. American Eagles pulls guidance, so that could be it. Cuts their costs. Suspends share buyback. Defers the dividend. So, I mean, a lot of bad news. That explains probably why they dropped so low. Now, I wouldn't mind playing this. Let me see. That's funny. After what I just said about their jeans, I can't believe it. But again, a lot of American people are stupid. Not everybody's like me when it comes to trying to save money. I wouldn't mind playing this short term. I think it's a little overdone. I think it's more of a sell the news type of thing. Let me see. So it broke through a support that it had recently a couple weeks ago. It'll be hit or miss. I mean, I wouldn't mind playing it maybe as a day trade or maybe even a very short-term swing trade, but I would definitely be setting a stop loss. If you can get in tomorrow under $7, I wouldn't mind getting in, but I would set a pretty tight stop loss of like 25 to 50 cents a share, and I'd probably keep this position very small, depending on your account size. Like, I know for my account size, I wouldn't buy no more than 20 shares of this personally. Again, keeping it very small. Again, my account size is only about $1,700, so 20 shares, that's roughly $140, $150 position. Again, I'm looking at something quick there. Bottle oil today is $6.80. So yeah, I mean, you're not in at a horrible price. You're down just a little bit right now. If you're in at $6.80, I would set a stop loss of $6.50. If it breaks the recent low, I would just go ahead and cut the losses and move on. You're doing a pretty big speculation on that trade, essentially. This is a big reason why I've gone to just trading like leveraged ETFs and whatnot, because I like to bet more on the overall market than individual stocks. I still play some stocks. You guys know I was holding quite a few stocks at one point a couple weeks ago, but a lot of these stocks, American Eagle, Gap, even things like Chipotle, what's another one? Is Olive Garden, I think, another one's on the stock market. Just different companies that are so impacted by, I mean, that's why this is down so much. I mean, no one can go there right now. So there might be more pain ahead, but it's not bad for a speculation. If nothing else, like I said, you might get a good little swing trade out of it. Honestly, being down that much, I wouldn't be surprised if it bounced back 5% tomorrow. So you might actually make a decent little chunk of money on that, depending on how much you put into it. Let's go back here. So we just went green on the NASDAQ as well. I don't know where that puts me now. So I'm still down a little bit on that trade. If we go over here and just take a look, go to the monitor, we were still down about $63 on that position. And the trade price overnight doesn't tend to go hand in hand directly with the NASDAQ, I noticed over the past few days. So we'll see how it opens up tomorrow. I expect this thing to be green by the end of the week, personally. Let's see. What's up, AJ? Any tech stocks? Twitter and Snapchat had a hell of a what they beat on their earnings. Jesus Christ. Last I checked, it was up about 20% after hours yesterday. I know they missed on the earnings per share, I think, but they beat on their overall revenues, if I remember right. So this one, I don't know. I'm still iffy about it. It's pretty close to the recent high. You might be able to ride this thing up to $20. Getting in a little late. I don't like it right now. I don't like anything generally that's up that much. Trading like a penny stock at the moment, but obviously it had some pretty decent news, beating expectations on that earning front. Still losing money though. That's what I do not like. But for a trade, I wouldn't mind it. I would definitely. It's another one I'd probably set a pretty tight stop loss. I'd probably set my stop loss. If you can get in under 17, I would set my stop loss at 16 even, probably taking a little bit more risk there from a dollar per share standpoint. I'd like to get this around 1675, 1650 on a little bit of a pullback. It's massively due to pullback. Man, I might even want to get this. I might want to see it retest 15, honestly, before getting in. Let me take a look. Let me go in further at this. So I want to see what happens around 16, and if 16 fails, then I'll reevaluate somewhere around 15. So yeah, right now, no, I wouldn't touch it at this moment. It might shoot up a little bit more, might be wrong in the short term, but I think in the next week or so, it'll pull back quite a bit, probably at least 10% roughly. So, but man, if you hopped in that thing right before the earnings call, Snap, that's one that's just, if you planned on holding it forever and you happen to hold it through that earnings call, you better be covering the profits, and that's what I'm thinking a lot of people are going to do. That's why I would want to wait. But yeah, if you're holding it right now, I would look at possibly selling most of it, maybe leaving a couple shares depending on the size, leaving a couple shares as a runner, so to speak, is what we call it. When you're already up on the position, you cover most of your profit, leave a couple as a runner in case if it continues to run up, collect a few more dollars of profit, and then end up moving on. Like I said, though, it might hit 20, roughly 19 to 20, before it does pull back. That wouldn't be a surprise, especially if the market continues to go up this week. I could definitely see it hitting $18 to $20 before pulling back, but I definitely think in the next week this thing will start to pull back. Look at the volume difference. You can see why it was up so much. The volume, these little blue bars, low, 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 and then just boom, skyrocketed on volume today. So let's see. Twitter as well. I forgot Twitter. Take a look. How's it going there? Might be. Twitter is up, also up about 10.5% on the day. Let me take a look here. So Twitter is coming close on the 180-day chart. Actually, it's right up against that 200-day as simple moving average. Earnings is coming up, let's see, in about a week. So it wouldn't be a bad play in the short term. I hate holding stuff during earnings. That's just me. I think Twitter's earnings and the earnings call and all that is going to probably send it down a little bit. But if you're in this thing right now, I'd probably have a target of around $30. That you're talking another roughly 10% move to the upside potentially. If, in keywords if we break through that SMA, let me look at the daily one actually. So on our daily chart, we actually have quite a bit more room to run. We have our 50-day moving average right here, which is right around $30. So yeah, I stick with my original target if you're in it. I would probably not get in it right now. It's a little bit of a stretch. It is setting up slightly bullish. You can see that we obviously dropped down to 20. Yeah, man, I really want to see going a little bit further. Yeah, tomorrow's going to be a decent kind of setup for this. If this thing pushes up, yeah, I wouldn't take a risk on it right now if you're not already in it. If you are in it, though, I would look at potentially maybe getting out around $30, just being on the conservative side. Again, you got the earnings coming up. Coincidentally, on the last earnings, it shot up quite a bit. So who knows, that might happen. If you're holding it right now, say you have 50 shares, for example, just a random number. If it comes up to 30, I would go ahead and at least cut the position in half, maybe even more. Leave about 20 shares as runners. See what happens on earnings. I'm assuming with this earnings, like a lot of things, it's probably going to go down. But it did go up the last one, but you can see back here dropped pretty damn heavily after earnings on that one before 2 quarters ago. So, yeah, that's my 2 cents on that one. Is it AOE manufactured in China? I believe so, actually. I might be. I think you're right on that. I think you might be. You probably are right on that, actually. Go back to that one briefly, or is it yeah. Yeah, like I said, that one I wouldn't mind as a day trade, like an overnight trade, very, very quick swing trade, heavy downward pattern. However, it is a little overdone in the very short term. Pull up that 1 hour chart, which we like to use a lot of times, heavily oversold. Like I said, sounds like Eric got in under $7, which is good. I would have a stop loss set at $6.50, just because that would break the recent low that it had in the after hours trading. But yeah, you could definitely potentially get $8 a share out of this. That'd be $1.20 a profit, which is not a bad profit at all for him. And that's just $8. Sounds like he's wanting 9. 9 might be pushing it. Might be. Because again, like if you look here, right around that 850 level was acting as a pretty solid support. And then let's see how many times we hit it. We won't count that one, but 1, 2, 3, 4, 5, and we're on the hourly candles here. So we hit it 1, 2, 3. We won't count the green candle. 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 on the neutral, and then it fell. So that was just in a period of 1, 2, 3, 4, 5 trading sessions. We hit it 13 times, and then it finally broke. And then obviously we just kind of free falled from there. So what do we know about stocks a lot of times? Old supports become new resistances. Old resistances become new supports. I expect that to probably happen here. So just be wary once it gets around that 825 to 850 level. Don't get greedy. If it gets up to there, you're in at 680. Let's do a quick percentage check. If you sold everything at 8, 31. That's a 22% profit. Not a bad trade at all, my friend. I would take that money and run because it's a pretty speculative trade, honestly. It's not a horrible trade, but it is very speculative, for sure. Yeah. Yeah, that's like what a lot of those guys do on Amazon with the drop shipping and all that. VIAC, let's take a look at that one. VAIC was down. I'm not gonna lie, I don't know anything about this company. Or hold on, I forgot. This is Viacom and CBS. That threw me off that it was all just mixed into one word. Okay, so this is like CBS and Viacom. I forgot that they merged and all that stuff. Let's take a look here. 1 year, 1 day. So they have a dividend, huh? I did not know that. Their earnings will be coming up. They got a couple weeks, about 2.5 weeks. And you said, let's see here, good play at $14. You are probably right about that. Let's see. Pulling back quite a bit, actually, over the last few days, or last week or so. And you said $14 would be, yes, I pretty much agree. I think 14.25, 14.50 would be a level to watch. If that breaks, it's probably coming back down to under 13. I'm watching that 14.25 level. It's kind of what I'm watching. If that breaks, it's probably coming back down under 13. And I'm just quick eyeballing this based off of the recent 20-day. What I'm looking at is, you can see we built a little bit of support right here in the past, broke it, again, acted as a resistance, broke, failed, and then we ended up pushing through it, bounced off that SMA, that's the 200, and now we're right at it again. So I will actually set some alerts on this because I want to see what happens. I'm going to set one alert at 1340 roughly. And then we'll set another alert at 1425. See what happens. Because like I said, I am a firm believer that those supports become very critical. Those shorter term, people underestimate those shorter term support levels, especially in a volatile market like this. We haven't had nearly as much volatility lately, but we started to pick back up, which, by the way, leads me to VIX. I wanted to take a look at the VIX. It had came up a little bit over the last few days. It's nice to see that it tapered off a little bit. It's down about 0.6, 0.7% at the moment, and it looks like everything else is starting to fall a little. But yeah, as for Viacom CBS, I think that 14.25 to 14.45 level is going to be a pretty critical area to watch overall. Check out HBI. Let's take a look. Oops. HBI had a down move today. It's Haynes. I like Haynes. Their company has been around, obviously, forever. Another one that is on a downward trend at the moment. The low is 696. When's their earnings coming up? Pull up that 1 day chart. On the 30th. Another one that's coming out in about a week. This one, let me put it this way. If I had the choice between Haynes and American Eagle, it's a coin flip, really, but I'm going with Haynes just because of that long track record. That's the only one up that I'm giving them. This one though, I don't know, honestly. Let me see. No real support level right now. If you want to call that 850 level support, it broke it. I would kind of see what happens with this one throughout the rest of the week, honestly. I don't know if I'd play it this week. I would kind of see what happens throughout the rest of the week. because it looks like it might continue to free fall back down. It might find another level support around $8. But if $8 craters, then you're probably talking $7 roughly again. So, and then of course you got the earnings coming up in about a week. So that one, I don't know. That one, those two clothing brands, it's a coin flip, honestly, between the two. Yeah. Yeah, but it was also down 3.5% on a pretty solid green day. So, yeah, I don't know. I honestly, I don't like either of them personally, but if I had to pick, I would, like I said, I'm going with Haynes just because of that long track record. Obviously, American Eagle's been around for a long time too. So, man, I don't know. Either one, from a chart standpoint, I will say, let me go, hold on, I don't want to misspeak. Yeah, from a chart standpoint, I would actually say American Eagle because again, it just looking at the chart and indicators, all that good stuff. It's got the most potential, at least for a little dead cat bounce, if nothing else, of at least 5 to 10%, maybe even like we were talking about a minute ago, maybe even 20. Or Haynes. Haynes, it could keep, like we said, it could keep falling. It broke that support of around 850. Look for that to act as a resistance now, even though it's only 13 cents. We'll see what happens. Like I said, just play it out by day and see what happens with that one. But for the quote-unquote quick potential, quick money potential, I think you got to go with American Eagle. So, I mean, like I said, it's a coin flip either way between those two. Me personally, I'm not going to put my money in them. That's just me. My money's locked up anyways at the moment, but yeah, they're pretty high risk for sure at the moment. I mean, they're shut. That's the thing too, is in this current environment, I don't really want to touch a whole lot of stuff that is highly susceptible to the lockdown, because if for some reason, I don't think it's going to happen, but if, say, in the next week or so, we hear bad stuff, say cases start to go back up, and then they're like, no, you know what, we need to shut the economy down for another 2 or 3 months, these things are going to get absolutely slaughtered. I don't think it's going to happen, but high risk, high reward, essentially. So it's a little bit too high of risk for me. My Siri was on the whole time. It's just a little bit too high risk for me. Like I said, that's why me personally, I'm playing the stuff like your SPXLs, SPXS for the flip side, SDAO, UDAO, and then obviously TQQQ and SQQQ to hedge a lot of times, just because when there's so much volatility within all these different sectors, I want to kind of just stick with the indices, so to speak. I don't want to have to try to nitpick certain stocks and think about, well, what's their exposure to this current environment. When I think about a broader indice, there's so many stocks that go into the indices, especially the Qs and the ES, that certain stocks can be down, like American Eagle, down 20%, but the market still goes up 3%, 2%, 3% on the day, and I can still make money because of that. It's just a little bit less work. Whenever you're like me, and I'm sure most of you, where we got full-time jobs where we can't really watch this stuff on a minute-by-minute basis, even if we can check it every 15 minutes or whatever, a lot can happen in 15 minutes at the end of the day. So that's why, like me, that's just me personally, my preference. It's worked out the best for me so far, playing just like indices and these leveraged ETFs. Yeah, USO, man, I don't want to talk about that one. That same here, actually. It was actually my only second loser since, or it might have been my first. It's either my first or second loser since hopping over to TD Ameritrade as my broker over the last 3.5, coming up on 4 weeks now. That one we lost, I think it was around $50 on that. If it wasn't for that trade, our account would have been up, even with being down right now on the TQQ position. we would still be at, let me get it pulled up here. We would be at a profit loss of still over $200 right now. But shit happens at the end of the day. We got to learn. If we don't make mistakes, and we don't learn. So I learned my mistake with USO. The main thing with a lot of these ETFs and whatnot is you got to read into the ETFs. USO has a ton of issues when it comes to like rolling futures contracts and all that kind of stuff, and it made the ETF just flat ass garbage the last week. What's it even at now, by the way? It's still at $2.50. So yeah, I'm glad that I got out when I did. You guys know I was holding this, last week. I dumped all my shares. It was either Thursday night or Friday morning, one of the two, while it was still in the, what was it, $3.60. I don't recall the exact price, but I was pretty much down like $1 a share, essentially. So that was nice little ass whooping, essentially. But yeah, like I said, right now this is all I'm actually holding, going long, very long on the NASDAQ with the 3 times leverage. And that's probably something I will dive into in a future stream, kind of a lesson video for people, because I know there's a lot of you out there and people that'll be tuning in for the first time, which, by the way, if you're new here, we'd love to have you. Definitely consider hitting that subscribe button and hitting the bell icon right beside it. That way you'll be notified every time we go live or upload another video. We got almost 1,000 of you here. It's crazy. We've been gaining some steam lately. Almost 2 to 4 of you a day joining us. It's awesome to see that continue to happen. And, of course, we have our Discord group chat that's down in the description box. We have 160 of you in there now. So it's awesome, again, to just see that community that we got keep on growing every day. But back to what I was about to say, I'm probably going to do this very soon, actually, now that I'm thinking about it, is just kind of go into the ins and outs about leveraged ETFs. To keep it short, a lot of you might know this already, but so you have, we'll just stay on the NASDAQ for a minute. So you have the NASDAQ, the NQ, essentially, that moves on a day-to-day basis, 0.25%, 1%, 2%, whatever, right? And then you have QQQ, obviously, which tends to do about the same thing that the NASDAQ does, pretty damn close, just like you have the ES and then you have SPY. So you also have TQQQ, which all this is it's just 3 times, essentially, roughly. It's never exact, obviously, but it's usually 3 times the movement of QQQ. So, for example, QQQ, as you can see, was up just under 3% on the day. And if we go look at TQQQ, it was up just under 9% on the day. So, again, about 3x usually whatever QQQ tends to move. So with that gives you leverage in the sense that, hey, I'm really bullish on the market at the moment, specifically the NASDAQ. I think the NASDAQ's going to go up, say 5% this week, just as a random number. Well, if you went ahead and hopped into TQQQ versus QQQ, you would see roughly a 15% return versus a 5% return. Now, I do not suggest staying in leveraged ETFs for long periods of time. I'm talking roughly 1 week, 2 weeks at the absolute most. Like my trade right now, I'm probably going to end up being in it roughly a week. I started buying this on Monday, I believe. Or actually, I think I had just a tiny bit on Friday. I don't remember exactly, but I think I had a tiny bit on Friday, bought a little bit more on Monday, sold out of all of my SQQQ, which, by the way, just goes inverse of TQQQ. As you can see, it was down 9% on the day. So a lot of times what I'll do is to kind of hedge myself, is I'll do kind of like a 5-to-1 or 10-to-1 ratio a lot of times, where if I'm pretty bullish on QQQQ, which is what I tend to play the most because it tends to have the most volatile moves overall. If I'm bullish on the Qs, then what I'll do is for every 10 shares, for example, or not even 10 shares, for every $10 that I'm buying of TQQQ, I'll buy $1 or $2 worth of SQQQ to kind of hedge my position. Like, for example, my position was down a lot in TQQQ just yesterday, but I made a little bit of money. I made 6 or 7% on SQQQ, so I was still making a little bit of profit, just keeping myself in the game, so to speak, not just simply just staying down, even though that's where I'm at the moment. But I did that because, like I said, I'm super bullish at the moment. I think we are going to keep going up. I expect this thing. I want to unload all this between $68 and $70. That would be roughly like $5 to $7 per share, which would be roughly, from a dollar standpoint, somewhere around $125 to $175 a profit. It'd be a pretty decent trade. Now, I'll settle. Honestly, I'll settle if this thing stalls out around 66. But I would really like to get $68 to $70 out of this. I think it's very possible, but we'll play it by day, play it by week, see what happens. But you definitely do not want to get caught holding these forever. A lot of people get caught up thinking, oh my God, man, if I bought this thing way back when, I would have like multiplied my money like 5x or something like that. And you don't think about the time decay factor. You don't think about if these ETFs ever had the splits or anything like that. So just keep in mind, these are more so leverage plays. Again, it's kind of, you're speculating at the end of the day. That's what we do a lot of times as traders. We're speculating at the end of the day. But I definitely love these. I love the TQQQ. I love SPXL. I love that. I was just reading your comments, Eric. I love SPXL. That one tends to follow ES, just 3X as well. ES, and then it goes, like, we'll take a look here. There's SPY, there's SPXL. And as you can see, roughly about 3 times the movement. And then you have UDOW, of course, which was also up about 5.5 to 6%. The ones I tend to play the most are SPXL and TQQQ when it comes to bullish side. I'll play UDOW sometimes when I think the Dow Jones has just absolutely got slaughtered. I was playing it a couple times, UDOW and SDOW, here about 2 weeks ago roughly, whenever the markets were still kind of getting their act together. But yeah, I definitely love these for your shorter term plays, and in my opinion, they're just much more safe than if you go with the individual stocks. Because like I said, especially in a normal environment where the economy is kind of not even necessarily rolling on all cylinders or anything, but there's just so much shit going on right now. You look at just each company, each company's kind of being affected in some sort of way. And when that comes out in the earning reports and conference calls and all of that, it's going to hit a lot of these stocks, at least in the short term. So it's like, why take the risk on those individual stocks right now when you could simply just stick with the leveraged ETFs, or not even like super highly leveraged ETFs. You could even, if you wanted to, just go with the simple stuff like QQQQ, and you could play options on these as well, or SPY is another one, and I forget the Dow one off the top of my head. I think it's DIA. Yeah, you have DIA as well. All these you can play options on if you wish, or just simply buy stock. That's your safest bet right now, versus trying to go out and pick those individual stocks. Again, that's just my opinion. That's more so for the guys like me, and like I know a lot of you guys who don't have the time to sit there and check every 1 to 2 minutes. Like me, a lot of times I can go 30 minutes to an hour without checking my phone and seeing kind of what my stocks are doing. I didn't even see this drop off at the end of the day. I didn't see it till I got home from work, because I was at my last stop of the day. It took me over an hour and a half. Ridiculous. My average stop usually takes me 20 minutes. That one took me an hour and a half. I was pissed off. Didn't even think to look at my stocks. I just drove home, and then I saw we had this sell-off to end the day. Not even a sell-off, man. I mean, Jesus Christ. We only went down a little bit in the big scheme of things, but yeah. How can we make donations to your channel? Well, I mean, I have a pay, and I appreciate it, by the way, because I'm definitely like not here for your all's money or anything like that, obviously, or when I had the channel for 4 years. But I mean, I appreciate it for sure. But the only thing that I have set up right now, and it's not even really set up that well, I have a Patreon technically. I don't even know how the damn thing works, in all honesty. I think it's down in the description box, maybe. I know once I hit 1,000 subscribers and certain other BS thresholds that I know my channel's already hit by now, that eventually in this chat box here, there'll be like a little dollar symbol or something like that you guys can click, and that'll make it where you guys can just instantly donate if you wish to. Again, I will never ask you guys for money on anything. I mean, we don't charge for anything over here, of course. I don't sell you guys any bullshit courses. I'm not going to act like I'm a genius or anything like that at all. We're all just in the same boat at the end of the day, just looking to achieve that financial freedom by any means necessary. But yeah, I mean, I don't really have, like I said, outside of that Patreon, which again, I don't know if I even set the damn thing up right. It's honestly kind of confusing, but I haven't taken the time to really dive into it at all. But we're coming up, I know, on like 1,000 subscribers pretty quickly. Last I checked, we were around like 960 to 962, something like that. I don't know what we're at right now. I'm actually getting it pulled up. Yeah, we're at 962 right now, actually. So we're coming up on it. So, I mean, we're gaining usually about 2 to 4 subscribers a day the last week or two. So we're starting to gain a little bit of steam on YouTube, it seems. So it's awesome to just see that our community here just continue to grow, because it's like I said, I'm not trying to like hop on here and tell you guys like what you guys should be investing in. I'm just trying to show you guys kind of what I do, what runs through my mind when I'm looking at different stocks, ETFs, options, futures. I mean, we talk about just everything in the stock market here, and we discuss obviously in Discord kind of what works for us. We kind of give each other tough love from time to time, telling each other, man, you need to get your shit together in this aspect of your trading. We're not rough on each other, but you know what I mean. Let's see. But I definitely appreciate it. Yeah, man, like I said, I appreciate it, and like I said, that should be available, that option to be able to pay, or not pay, but donate. That should be available fairly soon, I would think, here in the next, if we go on, I don't want to jinx myself or anything with this channel or anything, but here within the next month or so, we'll probably hit that $1,000 threshold, $1,000 subscriber threshold. YouTube's just got so many weird stipulations now. First, it was you have to have 1,000 subscribers. At first, when I very first started YouTube, you didn't have to have any requirements or anything like that to get money like from YouTube, which was pennies, by the way. I mean, I think YouTube owes me like $35 or $45, something like that, but they don't pay you till you hit $100. But I mean, they pay you pennies on the dollar for that advertising and all that good stuff. But now it's like you got to have 1,000 subscribers, you have to have 4,000 watch hours in the last 365 days. Your content has to not have a whole bunch of vulgar BS in it. That's why I try not to cuss on here as much as I would in person, I should say. But yeah, YouTube's a crazy game for sure. JNUG and JDST, I used to play those back in the day. The gold ETFs, what's going on with them anyways? I took a look at gold actually recently. Let's take a look just overall at GC first. Gold is it's actually back up above 1,700 again. I said a few weeks ago that it was probably topped out right around 1,800. I figured we'd come close. Somebody can call me out if I'm bullshitting here, but I think I said I can see us hitting 1,800, getting rejected, pulling back, and then probably retesting 1,800 again. And if we break through, then we could be talking about a ridiculous high of right around $1,800 to $1,900. So we came pretty damn close to 1,800. We pulled back quite a bit. It is setting up kind of bullishly. which I think that would mean you'd want to be in JNUG if I remember right. JNUG is the bull ETF if I remember right. Let me take a look here. Yeah, so JNUG tends to go hand in hand with gold, roughly. So JNUG was up over 13%, 423.20. Did they have a split of the stock? Or are they scheduled to 1 to 10 reverse split? I don't want to touch. Did it already happen? Tomorrow's the 23rd. So I don't know if they already had their reverse split. That's what I'm looking at up here. Or if it's happening tomorrow. It looks like it already happened looking at the stock's price. If it's happening tomorrow, I don't want to touch it at the moment. That's another thing with these ETFs, like we were talking about, reverse splits, time decay, all that stuff. It can really fuck a stock up. A prime example is TVIX. It tends to go 3 times, if I remember right, whatever VIX moves. No, this piece of shit does not need to be at $300, because if we look at it, oh, wow, it was at 1,000. No, it wasn't. It had a reverse split. And that's what makes it look like that. That's the biggest downside to these leveraged ETFs. It's just one of those things. But if that's happening tomorrow, I don't want to touch it right now. Let the reverse split shit play out first. Play out first. And then we'll see what happens. But overall, from like the overall bullish standpoint, yes, I'm a little bit bullish on oil. Why do I keep saying oil? Gold at the moment. I keep thinking about them gas prices, but in the short term, until that stuff plays out, you're not going to get as big of returns here, but maybe look at playing just GLD for now until the thing with JNUG and JDST plays out with the reverse split. Again, I don't know if it happened already, if it's happening tomorrow, but you can look at maybe playing a bullish option on GLD. It's very liquid in options, so you won't have any problems getting filled with your prices. And all that good stuff. Or, again, you could just settle with taking a slightly less profit if you want to buy actual stock. It is a little bit more expensive, obviously, $161 a share. But yeah, JNUG and JDST, I would kind of put on the back burner for now. Direxon announces reverse splits. So you might want to read into this article on you might want to read up on this reverse split that's going to happen on JNUG and JDST, like the date and all of that good stuff. Yeah, I would read up on that. Like I said, if it's happening tomorrow, whatever. I would just put it in your watch list for sure. Your active watch list that you watch on a daily basis, and then maybe come back to it in a couple of days, maybe by the end of the week or even Monday for sure. Everything should be straightened out with that. And like I said, it might have happened already. I don't know for sure. For the stock price being this low, I don't think it has happened yet. No, there's no way JDST's had a reverse split already at $1.18 a share. This thing would be much higher. So yeah, I want to sit this out for now. Both of them, JNUG and JDST. I want to sit it out and let that reverse split stuff play out, because do not want to get caught in the middle of that. But like I said, you can play. I know there's a whole bunch of other oil, cold ETFs. GLD is one of them. I can't think of the other. There's like 2 other ones that I know, but I can't think of off the top of my head. But I know if you just go on Google and just type in gold, bullish gold, bearish gold, ETFs, a list of a whole bunch of different ones will pop up. Just like with oil, I didn't know anything outside of like Drip and Gush or anything like that, and then I just randomly typed in oil bullish ETFs, oil bearish ETFs, and that's when I came up with all the other ones that we were playing for a little bit. We don't play them anymore, but yeah, for now, I wouldn't play it, but for sure, since I am bullish on gold, once this thing straightens out, I would probably look at playing this. But man, we can't even read the damn chart, hardly. There we go. So just based on the current pricing, which could obviously change at any minute, I would look at a target price of $8. So that'd be 50 cents. That'd be what, roughly not quite 10% profit, but at least 8, I think. Right around 8% profit. So a decent setup. And then obviously if you think, going back to gold, /GC, if you think gold is going to retest 1800, you're talking about an even bigger move to the upside. So we'll see what happens overall. Plus also, if you think the markets are going to pull back, or if you think there's more pain ahead, that'd be another reason to look at gold. I personally don't really see the markets pulling back too much more from here. Like I said, we might kind of be stuck range bound for now, but I think overall in the long term, the market's going to keep going up like it always does. Gold tends to move up too, but in the long term, it tends to move pretty sideways. Obviously, the last year or two, it's shot up to the upside. We've had a lot of volatility in the market, a lot of uncertainty. Take a look at like the last 20 years or whatever. Like, as you can see, pretty damn sideways. I mean, obviously, if you caught it way back at the beginning of 2000, you had a pretty good rise, but literally since 2010, 2011, you've pretty much gone nowhere, depending on where you got in. So gold, it tends to be a good little momentum play, but you can see here, had a double top on that RSI, but yet we continue to move higher, so who knows. But yeah, I like it a little bit short term. Like I said, I think it's going to at least retest 1800 one more time. It might end up going down after retesting it, but might go down after retesting it. But if it ends up breaking 1800, you might be talking new all-time high for gold. And I think if that happens, then you're talking about the market continuing to go down. So again, if you're thinking the market's going to go down longer term, wouldn't be a bad play for a longer term play, but I would not plan on playing this thing much past that 1790 to 1800 level, which again, you still got a pretty good rise overall. That's another 3 to 4% move to the upside, which for JNUG would be roughly another 10 to 12% move to the upside too. So a little bit of potential there. I probably wouldn't play it personally, but it does at least set up for a little bit of potential. If anything, honestly, I would probably just sit it out, kind of see what happens. You might miss out on a little bit of profit, but once this thing starts to look really toppy, that would be the time to maybe hop on over to JDST. Obviously, again, once the whole split thing works itself out, hop in some JDST and ride that ETF all the way up as gold starts to come back down, because my honest opinion is gold's going back under 1700 over the next year or two, and it might take till the election season wraps up and whatnot, but once we get all the BS out of the way, I think gold's probably heading back down to honestly around 16 to 1650, which would be awesome for JDST, of course. So hopefully the stream has been doing okay for you guys. Looks like we got 6 of you so far tuning in. And like I said, of course, if you're new to the channel, we'd love to have you here. Definitely consider hitting that subscribe button below and hitting the bell icon right beside it. That way you'll be notified every time we go live or upload another video for you guys. And like I said, hopefully I might not be able to get to it this week since it's already Wednesday and we have our Sunday stock talk every Sunday evening. But if possible, if I can't, then I'm going to do it for sure early next week. But sometime in the next week, we're going to sit down and look at those leveraged ETFs a little bit more for you guys, so you can get a better look at everything that goes on with those and how you can really maximize your potential day trade, swing trade, any type of trading style you do, really. You can definitely capitalize off those leverage ETFs. So I definitely suggest you guys look into those. Just do your own research and whatnot, and then come back here, of course, whenever we do that. If I don't do it by Friday, then we'll for sure do it by Tuesday or Wednesday next week for sure. So definitely stay tuned for that, and I'll let you guys know in Discord when we're doing that for sure. But with that, we'll just go ahead and wrap up. I want to thank all of you all again for tuning in. We had a good little conversation tonight, a good stream. Hopefully you guys enjoyed it. If you did, definitely make sure to smash the thumbs up button. I greatly appreciate it. And if you didn't enjoy it, hit the thumbs down. I don't give a damn either way. I just want to have that communication, know what you guys like or don't like. And like I said, if you see this after it uploads, if you have any questions or anything like that, just shout it out in the comments below. Or like we mentioned a couple times now, we have that Discord group chat. We'd love to have some new folks in there. Like I said, there's 160 of us in there now. So it's awesome just to see all of us continue to pile into there and just throw ideas off one another when it comes to trading the stock market. But until next time, guys, keep on going out there, making your profits, covering your profits, and achieving your financial freedom this year. And like I said, if I don't see you guys by Friday, then we'll have our Sunday stock talk on Sunday, hopefully no later than market open. And if anything changes, I'll definitely keep you guys updated in the Discord app as always. But until then, take it easy, everybody.